Good morning, everyone. Good morning, everyone. It is Monday, April 28th, 2025. It is so good to see you all this beautiful and amazing Monday morning here in Austin, Texas. Lots to go over this week, and I am so glad that you all are joining us this Monday morning. I want to remind you of a few things really quick, and you will receive reminders throughout the entire week, of course. But the Friday meeting will be over Zoom because the Austin Board of Realtors is closed on Friday. They have their annual event, so they do not have the room that we rent out from them. That's not available on Friday. So please join us over Zoom. The Friday team meeting is going to be over Zoom. I don't want to cancel the team meeting because we've got a lot to go over. This is a very important week for the market. We've got a lot going on this week. It's going to be wild for the bond market. Even today, we've already noticed really crazy activity this morning. The bond market, you can see behind me, we started off with yields going up, and then we're really at zero right now. So we've got a lot of economic data coming out this week. We've got unemployment figures, personal consumption expenditure. And this week is going to be a very important week for earnings. 180 S&P 500 companies are reporting earnings this week, including the Magnificent Seven, Apple, Google, Meta. So a lot going on this week that's going to affect the bond market. And of course, we continue to see news coming out related to tariffs and trade and everything else. IBM today announced that they're investing $150 billion within the U.S. So there's just a lot going on this week that will absolutely affect the bond market. Now, we are going to start by updating the best, the most reliable leading market indicator. The best, most reliable leading market indicator for the entire Austin area. That's going to be the new listing to pending ratio, where we take everything that is new on the market plus everything that is back on the market, and we divide it by everything that is active under contract and pending. Let us go ahead and get this up and running so we can start updating this information. And it's going to be interesting to see what happens this week, what's going on with inventory. We're going to talk about inventory active listings here after we update this new listing to pending ratio. But let's do a really quick overview over the past few weeks and see if we have to update anything over the past few weeks. Now, keep in mind, this is going to be for the 6-county area. And that's going to be Travis, Williamson, Bastrop, Hayes, Caldwell, along with Burnett counties. We have to go backwards in time a little bit for the pending because Monday at 11:59, the new back on the market, active under contract, price increase, price drop, it all locks in. But pendings, agents can update pendings for even a few weeks. So we have to go back to April 15th all the way through April 21st. And take a look at pending. This number for the 6-county area, let's go ahead and take a look at pending for residential from the 14th all the way through the 22nd. That's going to go up from 446 to 449, still a 0.60. Still a 0.60. Then we're going to go from the 7th to the 14th. That's going to be 517. That's not going to change, 0.56. Then from the 31st to the 7th, that's going to be 640. Let me just do a few more weeks just to make sure that everything is accurate. This goes up to 614. I'm just going to do the entire month of March just to make sure that everything is accurate. That matches from the 10th to the 17th, 606. That matches. Last one from the 3rd to the 10th, 520. Perfect. That all matches. Now we're going to start updating this week. That's going to be from the 21st all the way to the 28th. I want to remind you that tomorrow morning when you receive this update, all of the information will be locked except for the pending, the new price increase, price drop. That will never change, but the pending, as you can see, will change for the next few weeks. I went ahead and updated the open house figure, and take a look at this. 3,877 open houses were held over this 7-day period from April 21st all the way through April 28th. I don't know about you, but I am seeing a lot of open house signs out there. A lot of open house signs. Let's start taking a look at the number of new listings. This is going to be, like I said, from the 21st all the way through the 28th. Last week, or 2 weeks ago, last week when we updated this information, 1385. So far today, over the past 7 days, 1,312. 1312. Keep in mind that this figure will go up between now and 11:59 p.m. today, and it's going to go north of 1385. It'll settle somewhere around the 1,400 listing mark. Let's take a look at price increase. Interesting. A very, very low number of 150 price increases. What about price decreases? Interesting. 2,044. 2,044. Why is that giving me that figure? 2,044. I need to adjust this a little bit. That's what it is. Okay, there we go. 2,044. 2,044 price decreases. That's going to give us a 93 percentile. What is the 93 percentile? If I take everything that's gone up in price compared to everything that's gone down in price, simply looking at that price movement, what percentage went down in price? 94%. Let's go backwards in time and see when was the last time that we had 94%. That was October 14th through October 21st. That was 94%. We are at 93% right now, 93%. Let's take a look at back on the market. 189. 189 back on the market, 14%, a little bit less than the previous week. Now, active under contract. Okay. Wow. Okay. You know what? Usually I have you guess how many pending. I'm going to have you guess both the active under contract and the pending this time. Last week, 512 or 510 active under contract. What do you think this week? Let's just get a few guesses. What do you think so far? Active under contract. What do you think so far? Okay, 395. We've got Harold, a Farron at 400. We've got 536. Melanie coming in at a very bullish 536. Austin at a very bearish 250.39. All right, you all, let me go ahead and just get this number up. We've got Violet also at a very bullish 525. It starts with a 3. 369. 369 active under contract. I am not going to click the pending quite yet. And let's go ahead and get 5 guesses going on the pending. I'm not going to click on it quite yet because I don't even want my emotions to affect what you are going to guess. How many pendings do you think? We've got Austin coming in at 240. Oh, wow. A lot of you all are guessing. We've got 240.39. I love the 0.39. We've got 250, 200, 275, 289, 212. We are looking at starts with a 2, 259. That's going to give us a ratio of 0.42 going into the week. A 0.42 ratio going into the week. We've got a little snowflake under chat. That is cold. Bottom line, that is cold. The previous week, we're at 0.60. 2 weeks ago, 0.56. We're going to update the weekly comparison year over year, but let's go ahead and update the monthly. I'm going to update the pending for the entire month of March to see if this number goes up, and that's going to be 2,097. Let's update this to 2,097. It stays at 0.69. As of this morning, 6-county area, 14,145 active listings in the 6-county area. April of last year, 11,892. Let's start updating the number of new listings so far this month. This is going to be month to date. Number of new listings, we are at 5,498 new listings. Price increase, 591. Price decrease, we're at 6,668. For the month, we're at 92%. That is going to match September. April of 2024, we were at 91%. We're at 92%. 47% is the percentage of price drops in relation to the active. Let's go to back on the market. We're at 693 back on the market, 13%. 13% is going to be the lowest figure. We have to go all the way back to the 2004, 2003, 2004 to get a 13%. Let's see, we have to go all the way back to 2006. We're going to keep on going. There we go, 2003. June 2003 was the last time we had a 13% back on the market. Now let's take a look at active under contract. We are at 1,872. Let's take a look at pending, and that's going to give us the ratio so far this month, 1,462. 0.54 ratio for the month. 0.54 for the month. Speechless. I'll just say that much. That's a low ratio, bottom line. We're going to take a look at some graphs, but let's take a look at how many sold so far this month. Wow, this is amazing, you all. 1,790 properties sold so far this month. Withdrawn, we're at 581 properties have been withdrawn. We already beat April of 2024. Expired, 187. Expired. Let me move this out of the way. Let me print this as a PDF so that we can review everything. Just give me a few seconds and we will take a look at some charts, look at some comparisons, take a look at new listings entering the market. Just give me a few seconds so that I can export this information, and then I will open it up as a PDF so that we can review everything. It's just going to take a few seconds to get this information uploaded and updated. And there we have it. Here is the PDF. And while I am getting this up and running, I'm going to go ahead and go to the teamprice.com backend, and I went ahead and updated the teamprice.com backend so that you've got access to all of the information already on insight and statistics with the new listing to pending ratios. So when you go to teamprice.com and you click on new listing to pending ratio, all the information is already updated. In addition to that, the new listing to pending ratio is what gives us the data to update the market performance report. And I'm going to go ahead and update the market performance report so that when you click on market performance, that is also updated and you are good to go with all of that information. So if you click on market performance, it is all updated with the latest and greatest, and you can just get access to all of that. It's just going to take me just a few seconds to update this market performance. And we're going to review some of those charts because I do love the market performance charts. It does provide you with a really good macro level, what is happening with the entire market. And my favorite one out of the market performance, the one that we are going to review, is going to be the inventory stress index. And we will review that towards the end of the meeting. But let's take a look at the weekly year over year. And let's see what's going on. This is going to be the same exact week last year. We can see that new listings were only down by 1. So it's going to be on the positive side of things because it is only 10:17 a.m. And we're going to get new listings that will enter the market between now and the end of the day. So this number is going to be on the positive. I wouldn't say it's going to be a triple digit positive. It will be into the high double digit positive. We're going to be positive roughly 75 to 80 new listings compared to the same exact week last year. On the price increase side of things, we're positive 50, but on the price decrease, we are positive 463. Now, take a look at what's happening on the pending side of things. We did have a positive pending back in March 24th, 2025, all the way through March 31st, compared to the same week last year. That was up on the pending side of things by 1.7%. But since then, we've actually gone down. We were down by only one pending, 0.1%. But then 3 weeks ago, we were down by 17.3% on pending. That is why the ratio came in at a 0.56, whereas last year was a 0.87. And then that gap is going up, 21.8% difference year over year on pending. That's why the ratio was 0.62 versus 0.73 a year ago. And now we've got a ratio of 0.42. We know that this 0.42 ratio is going to go up, but it's going to settle somewhere in the mid 5. It's not going to go into the 0.6. It's not going to cross 0.6. That does put us in that substantial increase in inventory. The rate of new listings entering the market far exceeds the ratio of listings that are being absorbed by the market. Therefore, inventory will continue to go up. We know that for a fact. We can see the weekly line that even though we've seen an improvement in rates from January all the way to, so January rates were closer to the 7% mark. We notice an improvement. We had a little bit of a decrease. And when this line goes down, by the way, it does mean that rates go up. So as the line goes down, it means that rates go up. But this right here just absolutely fell off the cliff. The new listing to pending ratio at a 0.42. Historically, we really are at record low territory for the weekly new listing to pending ratio. That is the bottom line. That's the unfortunate line. Now, on the weekly number of new listings, we just hit a record high on the weekly number of new listings. The new listing to pending difference on the number of listings, that right there is a record high. That's where we take all the new listings on the market and then we get rid of all the pending listings, and that's going to be the difference. The numerical difference is at a record high right now. We've got more listings entering the market in relation to being absorbed by the market going on a weekly basis going back 4 years. And we're going to talk about the monthly. Of course, we also see open house. That is shooting up. More sellers are demanding open houses. I mean, you see that within agents at teamprice.com, the email that goes out. Every other day, we have agents saying, hey, I've got an open house. I need an agent for an open house. Please host my open house. And we're noticing this trend across our entire market. More and more people offering open houses. Let's take a look at the monthly data and do the monthly year over year comparison. We can see that already on the number of active listings, we are up 18.9% within the 6-county area on the number of active listings currently on the market. We have 2,253 more active listings on the market right now in April 2025 compared to April of 2024. Let's just skip forward on the new and pro. Well, let's talk about new. New, we are already up 2.5% on the number of new listings on the market. We're up 135. We've got 135 already, more new listings on the market. Now, keep in mind that we are getting about 175 or so new listings entering the market on a daily basis. And we have, 2.5 days left. So we can expect this number to go up by another 400 to 450. That's going to put us right around the 600 or so more new listings having entered the market April of this year compared to April of last year. Price increase, we're up 54. Price decrease, we're up 1,028. 1,028 more price decreases this April compared to last April. Let's focus on the pending. On the pending side of things, last month, year over year, we were down 2.7%. So far, we are down 25%. This number is going to improve because we know that agents are really bad when it comes to updating pending information. But bottom line, it is going to beat the 10.6% that we saw January and February. It's going to settle somewhere around the 13 to 15%. So April pendings are going to be lagging this April compared to last April by close to 14-15% less pendings. On the active side of things, we're going to be up close to 5% on the number of not active, but new. Active, we're up 18.9%. New, we're going to be up close to that 5 to 6% on the number of new listings. When we subtract the new in back on the market with the active under contract and pending, we're going to get this difference between the new and the pending. And so far, the difference is 2,857. And you can see that that's going to be the highest April on record by quite a bit. And we are 200% above the historical average for the month of April. That's going to be the difference between the new and the pending. Compared to April of last year, we were at 1,772, and we just shot up. And you can see on this line that we are the second highest on record. The difference between new and pending, it is by far the highest April on record, but it is the second highest month on record. The only other month going all the way back to January of 2000 that was higher than where we are right now was June of 2022 at 3,051. We're at 2,857. And that's going to cause, of course, the ratio to go down. And we can see that at a 0.54 ratio, we are dramatically under the ratio of April of last year at a 0.72. And here's the line graph to show that. We only have one April that has a lower ratio, and that's going to be April of 2003. That had a lower ratio, but outside of April 2023, so far, this is going to be the lowest ratio. And you can see that April of 2003, there was a 0.51 ratio, and here we are right now at a 0.94 ratio. Let's start talking numbers. And let's take a look at the number of active listings. And you can see that today is a record high day. We have never had more active listings on the market in the 6-county area going back 20 years. We're at 14,145. Let's take a look at some cumulative numbers. New listings. So far this month, 5,498. That is already 2.5% higher than the month of April 2024. Cumulative. When you take everything new on the market, everything that's ever come on the market, On the cumulative side of things, January, February, March, and April, we are at 18,669 new listings. That is a 6.1% increase year over year, and we are 31.1% above average on the cumulative new listings. Let's take a look at back on the market. Well, let's skip back on the market. Let's take a look at pending. Pending so far this month, 3,334 active under contract plus pending. Where does that compare? How do we compare that to other Aprils? We're down 25%. 25% compared to April of last year. Let's take a look at cumulative. On the cumulative side of things, when I take everything January, February, March, and April, we are down 12.5% on the number of pending transactions cumulative. Let's start adjusting this by population. When we adjust the number of pending by population, we divide the number of pending by 100,000 people so that we can compare apples to apples. So far in the month of April, 131 pending transactions per 100,000 people. Let's take a look at the graph. There we are. Last year, we were at 179, which was slightly over 2023 at 178. When you take a look at the pending adjusted for 100,000 people so far in April, we're at 131 right now. That is a drop of 26.8%. On the cumulative side of things, we're at 556. All pendings, January through April, adjusted for population. The good news is that it is not the worst year on record. That is the good news, and I'll take that all day long. 2009 was 552. It's right now 556. So it's going to be the second lowest on record adjusted for population. This number is going to go up. It's going to settle somewhere around the 562-ish or so. So it's not going to beat 2023 at 572. It will not beat 582 2011. It's going to continue to be the second lowest on record on the number of pending transactions. Active minus pending. If I take a look at everything that's active minus everything that's pending, we are at 10,811. And you can see that this number just shoots up. Only 4 years ago, we were negative 2,644. We're a positive 10,811 right now, which is just amazing. And we're going to skip withdrawn plus expired. Let's focus on sold. So far for the month of April, what's been reported through the Austin area MLS, Unlock MLS, 1,790 sold properties. This number is going to go up, but it's not going to beat last year, where April of last year we had 2,968. It's probably not going to beat 2023 at 2,641. It's going to be somewhere around the 2,400 to 2,500 mark. That's where we're going to end up. So let's take a look at the cumulative sold from January through April. 8,500, down 14.1%. That's cumulative sold. When we adjust this for population, we're at 335. Cumulative sold adjusted for population, when you adjust it by 100,000 people, so that we can index it to population growth, we are down 22.4%. The ratio for the entire year right now is at a 0.66. And so far, so far this entire year, the difference between everything new and back on the market to everything active under contract and pending, we're on the plus side, 7,289. As of now, we are going to beat last year where we had 11,176. That was the highest number going back to 2010. We're going to beat that. As of now, when you look at the projection, we are looking at ending the year. Well, as a matter of fact, let me just pull up something really quick. Just give me 1 second so I can pull this up. We've got so far in 2025. So let's just see. So far today, we've got 118 days. We've already gone through 118 days. And we've got 7,289. It looks like we're going to end the year right around 20,000. Right around 20 to 21,000 is going to be the difference between new back on the market, active under contract, and pending. Yes, we've got a question. Melanie Price, please go for it.
So remember last year how like 3 quarters of the year was just super dragging and slow, and then the last quarter was like really great. Is
Yes, I
there
do.
any chance, do you see even the slightest glimmer of hope of something like that happening this year?
Yeah, I mean, take a look at, it was last year where we just saw a really nice pickup, or even, 2 years ago, back in 2023, we started off strong, slowed down a little bit, finished strong. Last year, we had this 0.67, and then we just really outperformed the year before. So it was last year is where we saw a dramatic increase in inventory on that first quarter. As a matter of fact, let me go take a look at the number of new listings entering the market. Take a look at that. New listings exploded in the market between March, April, and May. And it was like, wow, we've got a lot of inventory. Things are really slowing down. And then new listings actually slow down. It just hit a wall. May, it hit a wall. We actually started seeing less new listings entering the market. June, July, August, going into September. And what happened then? We had an increase in activity, a pullback in new listings entering the market. The ratio improved, and we ended the year fairly well. That's exactly what happened last year. So, is there a glimmer of hope that this is going to happen this year? Yeah, absolutely. Things are so unpredictable. If there's one thing that I can guarantee is that we have no idea what's going to happen next month. That I can absolutely guarantee. Now, I'll say this, with this new listing to pending ratio, which is a tried and true metric, what do we know for a fact will happen? We know that we're going to experience pressure in pricing. We know that because what happened last year? Well, sellers reacted to the increase in inventory after the selling season was officially over, which is June, July. So sellers started lowering prices knowing that they missed out on the selling season. Rates improved, and then buyers enter the market. And that caused a really decent third and fourth quarter. Could the same cycle repeat itself this year? Absolutely. No doubt about that. That very cycle will repeat itself this year. We're going to have sellers that come June, July timeframe are going to say, uh-oh, my house didn't sell. The season is over. We've got all this inventory. Lower the price. Start lowering the price. That's going to cause buyers to see that product as more attractive. We are getting fairly decent communication from the Fed that we do expect a lowering of the overnight lending rate towards the third and fourth quarter, but all of that is going to be based on inflation numbers that will be released partially this week and then next week. if inflation numbers come in positive, lower than expected, and if there's stability within the market, stability within tariffs and everything else, and then inflation numbers don't come in as high as everyone is expecting, the Fed hates chaos. The Fed hates uncertainty. If we have certainty within tariffs and trade, if inflation numbers are not hotter than they were anticipating, and then the Fed starts lowering rates, we could have exactly the same scenario that you've described. Sellers reacted to the increase in inventory. They lower price. We've got a better interest rate environment. Mortgage rates hopefully will go down, and we'll have a really decent third and fourth quarter. The exact opposite could happen. We could have no clarity on tariffs. We could have an inflationary environment where all of a sudden prices are going up and people are, less cash that they would ever want to buy a house with. And we've got the Fed saying, well, no, we're not going to lower rates because now we're seeing the effect of tariffs on pricing. Either one of those scenarios could happen. Either one of those scenarios. And I wouldn't begin to guess which one of those scenarios will take place. What I know for certain is that this ratio causes pressure on pricing, that this ratio causes pressure on inventory. Now, I will say this, Melanie, is that if we see this same scenario repeat itself this year, it's not going to be like we're going to get, let's go to the pending chart. New listing, let's find the pending. We've got pending. We went from 3167 to 3500. We went from 3000 to 3300, 27 to 3000. So we had a few months. We had September, October, November, where we outperformed the previous year. We will take that all day long. That's good news. But that's because our pain tolerance has been adjusted, right? We're like, yes, it's no longer the worst month. It's the second worst month. So it's going to be in relation to our pain tolerance. So if for some reason we have exactly the same thing happen, and in November we go from 3,072 to, let's just say, 3,150, we're going to be like, yes, it was better than the previous 3 years. It was better than the previous 4 years. Well, it still means that inventory is high. It still means that prices are going down. So we're not going to see a 25% uptick or a 40% uptick in pendings. There is no scenario where that happens. If we see an improvement, it's going to be measured in either single-digit percentage or low double-digit percentage, not 40% higher. Does that make sense? Now, we'll rejoice with that and we'll be excited, but that's simply because our pain tolerance has been adjusted. Does that make sense? Yeah, once again, right, these numbers absolutely will never lie. These numbers don't lie. And even the narrative, and I've been combating this narrative for many years, the narrative that, oh my goodness, if rates would just go down to the 5% or 4%, the market would react and it would just get so much better. Not true. Not true. And I've got the data to show you that. It's true for your one client. It's true at the weekly, week over week level. It's not true at the macro level. So week over week, you're going to get a 10% increase in weekly mortgage applications. And that's true at the week over week level. In the week over week level, we can say, yes, we're up 5%. Yes, we're up 10%. At the macro level, that's not true at all. And let me show you the data at the macro level. And all we have to do is we have to take a look at the national market index. And this is going to be updated this week because the new data is going to be released this week. And all we have to do is take a look at the home price index adjusted for inflation, CPI divided by HPI divided by by CPI, and then we superimpose that with mortgage rates. So let me break down this chart really quick. Number one is we've got this right here. This line is going to be your home price index adjusted for inflation. The yellow line is going to be mortgage rates. These two little dots right there, this is when the Fed started buying mortgage-backed securities, and then when they stopped buying mortgage-backed securities. Now, I was in real estate from this point forward. This red line that I just drew is when I entered real estate. So I remember when we reached the peak market and it started going down, we had our little bull trap right there, and then it started going down. Now, December of 2008, right on this mark, and let me just add an arrow, right here, that is when the Fed announced that right here. That's when they announced, hey, we're going to start buying mortgage-backed securities. That's when they announced it. Immediately, rates plummeted. And the reason they announced it was because prices were down. They're like, all right, we need to stabilize the housing market. Rates plummeted. And what happened with pricing? Kept on going down. It kept on going down. Not only did it keep on going down, it kept on going down for another 2.5 years. So if we are in a true market cycle that is correcting, then this is the ride. This is the ride. Week over week, we're going to have an improvement. We're going to have a backtrack. An improvement, we're going to backtrack. Week over week, up 10%, down 20%, up 15%, down 13%. Month over month, that erratic up and down is going to narrow a little bit, but we can see a broader trend month over month. And then we've got the year over year. And we can see right now that a 0.66 ratio year over year, all right, that's pretty low. So we know that we're in this cycle. There's no arguing that we're in this cycle. The big question is, when is this cycle going to end? Like, okay, we've been in this now since we peaked May of 2022. Feels like forever ago. We're in this for 3 years. When is this going to peak? I would say that it does. When is this going to bottom out? Meaning, like, when is this pain going to peak? Meaning the market bottoming out. I would say that Austin is very unique because we're the first city experiencing this. We're the city experiencing the highest level of correction. Hopefully that means that we hit the bottom first and we start recovering before everyone else. But there's no way that the Fed is going to interject and lower anything when the rest of the country is still reaching some record high numbers. They're just not going to do that. I would say that easily we have another 18 to 24 months left of market corrections. 2-3 good months, 4 or 5 bad months. 2-3 good, 4 or 5 bad. And historically, March, April, May tends to be really good months. And then with a product that doesn't sell, we then go into a price drop cycle. That causes more pressure on pricing. So that's what I think is going to happen. So, yeah, so there we go. There was an article that was just posted. Thank you for sending me that. As a matter of fact, let me go ahead and just post this article on the windows so we can take a look at it. Home sales in Austin slipped nearly 10% in Q1. Potential buyers just a little bit more trepidatious right now, experts say. Well, once again, we've been talking about this for months and weeks and all that. Absolutely. That's exactly what's happening. So this right here confirms that even if rates really start going down, we're going to see weekly improvements, but not necessarily this macro level improvement that's just going to pick us up out of this normal cycle that does repeat itself over the course of time. But that's the new listing to pending ratio updates. Let's start taking a look at some inventory data, because on the inventory side of things, we also have some pretty eye-opening things going on. We crossed the 16,000 active mark this morning. We are at 16,095 active listings currently on the market. That's going to be an increase of 184 from Friday, 531 weekly, and almost 2,000 monthly, 1,954 active listings were added to the market in the past month. That's going to be a 13.82% increase month over month and a 23.2. On the pending side of things, we're shy of 5,000 pendings. We are down 4.1% year over year on pendings, and that's going to put pressure on the activity index. We're now under 24% activity index. We're at 23.7%. Months of inventory, we are just going towards that 6 month of inventory mark. When you look at the activity index, resale versus new construction, resale under 20%. We're now staying under 20% on the resale activity index, pending divided by active plus pending. And you can see active listings, we are up 23.2% year over year. Pending listings, we are down 4.1%. This line is going to drop pretty quickly as we shift from April 28th into May 1st. All of the properties that are closing at the end of the month will go ahead and close. That number will drop by quite a bit. We can see that back in 2023, 2024. The same thing is going to happen this year. Months of inventory, you can see that line going straight up. We are 26.1% higher on months of inventory year over year. And there's that record high. We're at 16,095. The previous high was Friday at 15,911. So from the previous high of Friday till today, we're up 184. Last year, we peaked July 15th of 2024 at 15,503. So we have, 600 more listings, and we're only April 28th right now. It took us all the way to July 15th to peak last year. This year, we are at a record high right now, and we've already beat out 5 record high days so far. Seems like every other day we reach a record high on the number of active listings, which means that price drops are now increasing. We're at 48.6% price drop right now. Out of all of the 16,095 homes currently on the market, 48.6% of those have experienced a price drop. Let's take a look at activity index across the board, and we're going to take a look at months of inventory also, because over Facebook, I posted a really interesting chart that I just created, just kind of out of nowhere. I was like, well, let me take a look at the year-to-date inventory increase, and I really like the way that this chart came out. As a matter of fact, I liked it so much that I think I'm going to add this to one of the resources that we have and take a look at what is happening with months of inventory from January all the way through April. Marble Falls, January, 4.98. Right now, 11, meaning more than 11, but we cap it at 11. That's a 120% increase in months of inventory from January to now. You take a look at Cedar Park, up 98%. Driftwood, 96%. Leander, up 70%. We've got Bertina saying, hey, what happened to no more charts? Well, I'm a sucker for charts, Bertina. I am. This is my drug. If you ever wonder what kind of hobby I have, I just like getting in front of my computer like really early in the morning where it's nice and peaceful and just looking at stuff. That's what I enjoy. I feel like Hutto is low due to all the new construction. Thoughts? You are absolutely right. So what happened was that track builders came in and they said, we're going to slow down building. We're going to pull back a little bit. Let's get rid of our specs. Let's not set up form boards as much as we were doing. We notice demand is down. We notice traffic is down. So we're going to slow down the even permitting request. And we can see that within the data, they pulled back on permits. They pulled back on housing starts, and they want to get rid of their existing inventory. And they're like, just slash it, cut the price, offer incentives, lower the rate, do whatever it takes. So overnight, we just saw a situation where less active listings entering the market, and then we saw a bunch of properties go pending. That's exactly what happened. That's why Hutto had a pretty dramatic decrease on months of inventory, but also a pretty dramatic increase in the activity index. Activity index in Hutto went sky high, inventory went down because they pulled back on housing starts and just got a bunch of stuff under contract. You're absolutely right. But this is really eye-opening to see. And same thing happened, by the way, with Del Valle. Del Valle did exactly the same thing. But it is interesting to see just how much inventory has increased, not year over year. This is really just in one quarter from January all the way here through April. So we've got the activity index, and let's take a look at what is happening with activity index across the top 30 cities that we're tracking. You can see Hutto 31.9 improvement in activity index. Let's take a look at any record highs. I don't see any record highs on activity index. And we only have 2 record lows on activity index. We have Leander. That just hit a record low. So for those in Leander, activity in Leander has just ground to just about a halt. We went from 31.9 or 31.3% activity index April of last year down to 22% activity index. That right there is going to be a 12-month record low on activity index. Smithville, you just can't give a property away in Smithville. On the zip code side of things, let's take a look at record high, record low. We have 04. Be very cautious out there in 04. If you've got a buyer for 04, your buyer's going to have a lot of options. 04 just hit a 12-month record low on activity index. We also have 4.1. Now, 4.1, really interesting to see what's happening in 4.1. Overnight, it just fell off a cliff. A combination of new homes entering the market. We had a lot of new listings entering the market in 4.1, along with a halt on the number of pendings. Overnight, 4.1 just hit a wall. But take a look at a record high, 78737, outperforming last year. That's a record high. 4.7, that's going to be a record low. Any other record highs and lows? We've got, there's Leander right there, record low, 12-month record low. But look at Georgetown. If you're in the 78633 Georgetown, that right there just hit a record high. Real estate is hyper local, you all. Really amazing. San Marcos, that hit a 12-month high. Cedar Creek, 12-month low. Bertram is all over the place. You have this 9.6, and then it goes up to 30. You've got very little inventory in Bertram, so just even a few listings just has a dramatic effect on the data. Now, you've been hearing me say this before. This is a bifurcated market. So even though we are down 26.3% on number of sold properties, a 30-day period compared to the same 30-day period last year, on the bottom 25th percentile, prices are down 2.9%. But on the top 25th percentile, prices are up 3.4%. So rely on this resource just to understand why prices continue to go up, and prices are going up. You can see that month over month, the average sold price is up almost $30,000. Year over year, it's up $12,000. On the median side of things, month over month, we're up $23,000, a little bit north of $23,000, 5.3%. Year over year, we're up by only $257. This number is going to go red. Now, when you take a look at sold prices, you can see that March is the best month on record when you look at month over month price changes. Then you get December, then you get April. So April historically is the third best month on record. May, you start getting a little bit of a pullback. It does match December. So we do get those closings in May with deals that went under contract both March and April. May is a good month, but that's what we were talking about. Once you hit June, July, the worst month on record, month over month, is going to be September. Those are going to be the closings from July and August. What does that tell you? Sellers start dropping their prices when? June, July timeframe. So we're April 28th right now. We're going to have another month where sellers are going to hold tight. More inventory is going to hit the market. And then the price drops are going to start come July timeframe. Those are going to be the closings that are going to happen August, September. September historically is the worst month on record for month over month price gains. That's where the lagging indicator, which is the sold price, will reflect the leading indicator that happened 90 days earlier. That's why I can say with 100% certainty that prices are going to go down. That when we look at this information right here, we're going to see very similar trends that we saw last year, that we saw 2 years ago. We're going to see 3, 4, 5% month over month price drops come September, October, November, because all the leading indicators are pointing in that direction. Now, that's going to cause an increase on the number of sold properties because pricing is going to be more attractive, but buyers are going to have way more leverage towards the September, October, November timeframe. That's just a fact. The projection on the number of sold properties is roughly 2,650. That is going to be down compared to last year. Last year, we sold exactly 3,000 properties for April 2024. The projection right now is 2,650. So let's talk about type of market, and then we're going to call it a day. Sellers market, still out of the top 30 cities that we track, 7 out of the top 30 are still in a seller's market, 15 in a neutral market, and 8 in a buyer's market. On the zip code side of things, 33 out of the top 75 zip codes, we are in a seller's market, 44%, 21 in a neutral market, and we are matching that with the buyer's market, 21 in a buyer's market. So that's the update for the morning. That is our Monday morning touch point. Increase in inventory on the buyer's side of things. Realize that buyers are going to have a lot more leverage as we enter the May, June, July timeframe. And then on the seller side of things, you've got to be on the hyper local market side of things. Some markets are doing really quite well. We've got a comment right there. The seller's market is still strong. Absolutely. When you take a look at the sold to list price ratio, there are properties that are receiving multiple offers. I mean, sold over list price so far this month is at 15%. 15% sold to list price ratio. April of last year was 16.9, but 15% is going to be the best one going all the way back to May of 2024. I mean, just keep that in mind. 15% of the properties sold over list price. We have an improvement on the sold price to final list price at 97.76, lower than last year, right? So here's that 97.8, a little bit lower than last year at 97.9, but better than March, better than February, better than January. But we do have really good February, March, April into May. We have really, really good first quarters. Austin real estate is a first quarter real estate. Just keep that in mind. So we do have one question. Melanie Price, please go for it. You said you had a question.
Yes, Dan. Thank you. So I have a house under contract with solar panels, and I was trying to find information because I couldn't remember if you said to get them inspected. with the company that installed them, or is it someone else who inspects it?
Well, the company that installed it might not even be in business anymore. That is one of the biggest challenges when it comes to solar panels. Now, there are electricians that specialize in solar panel inspection, and so I would certainly recommend that. But I do want to point you to a resource that we have available on our website for you and everyone else. So if you go to our real estate glossary and you go to transferring a solar panel contract, and right here we have a really nice FAQ. We've got everything, but if you keep on scrolling down, we have this checklist. And this checklist has a bunch of information on anything and everything that you could ever need when it comes to solar panels, including some additional tips. And here's the inspection and functionality. Hire a solar certified electrician or an NABCEP certified inspector. So that would be my recommendation on that, is just to go ahead and just look over this information, and you want to hire an electrician that can look at that solar panel with the experience, not only on the meter, the net meter, the actual panel itself. So take a look at that. So Farron did post, Melanie, my husband, is a master electrician who specializes in solar. If you want to reach out via email, I can connect. Yeah, this is great. Absolutely. This is fantastic. And as a matter of fact, Farron, I can even put his information here if you want me to. So send me a note and I'm happy to put his information here. But that's my recommendation on solar panels. Someone that has the knowledge and the skill to inspect solar panel. Does that answer your question?
Yes, it does.
Okay, good stuff. Any other questions, you all? Any other questions about the market? Let me go ahead and just go over really quick the upcoming economic calendar news that we have tomorrow. We've got home price index along with the Case-Shiller, Standard & Poor's Case-Shiller, HPI. That's going to put us in a position where we can update a few resources on the drive. We're going to be able to update the home price index under macroeconomic data. We're going to update the home price index along with the MBA purchase index, and we're also going to update the national market index. Those three resources are going to be updated as soon as they publish this data tomorrow morning at 8 o'clock in the morning. We've got job opening, labor turnover, mortgage application, personal consumption expenditure. That's going to be inflation, preliminary GDP. We've got more inflation data at 9 a.m. That's going to be the core PC. Back to that personal consumption expenditure. This is going to be the Fed's favorite inflation reading. We've got the pending home sales index. That's going to give us the data so that we can update the pending home sales resource on Insight and Statistics. And then we go into Thursday, we've got more inflation data, Institute of Supply Chain Management, manufacturing, pricing, PMI. And then, of course, we've got employment, unemployment data that comes out on Friday. So as you can see, it's going to be a very important week. In addition to over 180 S&P 500 companies reporting earnings this week, very important week for the bond market, very important week for the economy. Stay tuned. I will keep you posted via our internal Facebook page, and I'll send you resources as they come available and keep you updated on the state of the market along with interest rates. We do have our contract review broker Q&A on Wednesday. I'll send you a reminder. And then our team meeting is going to be done over Zoom because the Awesome Board of Realtors is going to be closed on Friday. Otherwise, thank you all so much for joining. Super appreciate it. Go to Insight and Statistics. All this information has been updated. Even the new list independent ratio that we just got done updating. Let me do a little bit of a refresh right there. We just got done updating this. It's already live on our website. So take a look at that. If you have any questions, comments, concerns, criticisms, or complaints, let me know. Here to help. Otherwise, you all, I will see you later. Have an absolutely excellent rest of your day, and I will chat with you later.